Hello, dear everyone. Glad to see you here. And as you can see, we are going to discuss the ECB minimum bid rate news release. At this point, I would like to remind you that the ECB could, here we see the forecast and the previous figure, so the forecast of 0.25% and the previous figure of 0.25%. The ECB could cut the main lending rate by 0.1% and leave the deposit rate at 0% in an attempt to lower the value of the euro without using the heavier tools. Draghi's dilemma is becoming a big headache. He would prefer to have a lower value of the euro against both the dollar and the Chinese yuan without having to take action. It worked amazingly well with the OMT. However, even his stronger and more explicit verbal interventions to lower the exchange rate are having a diminishing effect. And the excellent US NFP was not enough to do the job for Draghi. More words without action could damage his credibility. Inflation is low and well below the 2% target, but not below 0.5%, a level that will probably force the ECB to act. With core inflation standing at 1%, it will be hard for Draghi to convince his German colleagues to use the nuclear option of setting a negative deposit rate. Regarding QE, it's quite complicated in the Eurozone and probably left as the last option. Okay, so let's take a look at what do we have here, and we have traditionally experts from around the world of different banks and firms on the matter, that is ECB minimum bid rate. And as you can see, according to this data, Bloomberg survey summary, the median estimate is 0.25%, average estimate is 0.246%, high estimate of 0.25%, and low estimate of 0.1%, whereas the number of estimates is 58. And finally, let's move on to our fundamental analysis, that is the impact on the euro-US dollar currency pair. And as you can see, members of Dukascopy community were slightly bullish on the matter, that is 50.85% bullish versus 49.15% bearish comments. And as you can see, one of the bullish comments by Drishy that it is expected that ECB will leave its rate unchanged and wait for a fresh inflation report before they take any action. Therefore, he's bullish on the euro. And Sonia Trader is bearish on the pair, and she says that in April in the Eurozone, improved data on the manufacturing sector and inflation in the service sector, the euro rose on Tuesday at 0.4%. This can be negative for exports. If the ECB does not react, the difference in balance with America will continue expanding. We'll continue with the rate of interest rate to 0.25. Tic-tac, waiting if the words of Draghi are empty or have contended this time. Thus, she's bearish on euro-US dollar. Okay, so I guess at this point that is it from my side, and I would love to welcome Alex here on the whiteboard to discuss more technical part of our discussion. So Alex, you're welcome on the whiteboard.
Once again, today we're having a big day as ECB is gathering to assess the current state of the Eurozone economy. And even though no fresh actions is expected from the ECB, still there is a rather high possibility that Mario Draghi will try to talk down the euro, as we see that the most traded currency pair is trading around 1.40 mark. So it's rather risky for the Eurozone economy, which is still performing rather weak. So actually, first of all, I'd like to point out that usually the reaction on the minimum bid rate announcement is rather subdued. And as we see, during the last 5 months, maximum volatility was 44 pips, so not really impressive, frankly speaking. And the main reason for this is, first of all, the ECB press conference, which is scheduled 1 hour later from the news release. And therefore, I guess the major moves will come slightly later today. Regarding the trading strategy itself, so the current market price is 139.35, and as you can see, the recommended take profit is placed at 139.15, and in pips that will be just 90 pips from the current market price, and we see that this level is represented by a weekly resistance, so quite a substantial level for the short traders actually. Regarding the stop loss, as you can see, first of all, we have placed it around recent high at 139.49. However, I guess that would be too risky, keeping in mind the recent depreciation of the pair, and therefore we can lower it up to the 200-minute simple moving average, which is currently located at 139.40. So therefore the trading strategy will be less risky once again. So yep, just 9 pips lower from the previous level. Regarding the market sentiment and currency indices, so here no surprises actually. The market sentiment is still extremely bearish, with more than 70% of all open positions being short on the pair. Traders' attitudes towards the single currency is still negative, with investors selling the euro in almost 65% of the time. And what is more important, slight majority of pending orders in the 50 and 100 pips range are placed to sell the pair. And actually, if we'll have a look at the market sentiment provided by other market participants, here we'll see practically the same situation as we have with the Dukascopy market sentiment index. However, I would like to point out that traders at daily FX, I guess, have completely lost their faith in the Euro-USD currency pair, as they are opening short positions in 82% of the time. So really impressive actually. Regarding the technicals, here we see a completely different situation, and I guess it happens rather rarely, as practically all indicators on the variety of time frames are sending buy signals. And even keeping in mind the recent rally on Euro-USD, which has lasted since July, if I'm not mistaken. Yeah, that's really surprising. Once again, is indicators even on the weekly and monthly chart are sending buy signals. So therefore, traders believe that the pair will depreciate, while technicals are suggesting that the pair will continue climbing higher. So just 2 minutes left before the news release, and I would like to share with you one quotation, which I find really attractive actually. And we see that senior currency strategist from Rabobank said that if there will be no change in the monetary policy, then people will find it a great excuse to buy the euro. And therefore, investors are viewing the euro as a glass half full, and the ECB doesn't have any awful lot of control of at the moment. So rather interesting, I found. So once again, the average market volatility after the news release is ranging from 7 up to 44 pips, and the recommended take profit is currently placed just 19 pips or 18 pips from the current market price. So the target is rather reachable, I guess, even in case the ECB will stay pat on its monetary policy. However, so just less than a minute before the news release, so I guess we'll not change the chart at the moment and we'll leave it as it is. So yeah, just half a minute left. Yeah, actually from the fundamental part, we can say that the Eurozone economy is gaining momentum slightly, even though growth remains sluggish. If I'm not mistaken, that was just 0.2%. In the recent quarter. Regarding the unemployment rate, it also remained unchanged at 11.9%. So we do not see actually any improvement in the economy, even though inflation picked up in April. However, the figure was weaker than expected. And just one more thing, it's German economy, which actually sending worrying signals in the recent weeks, and the main reason is tensions in Ukraine. So, guys, the data is already out. The initial market reaction is bullish, and we see that the pair is trading at 139, almost 50, right? So, yep, the main refinancing rate remained unchanged in 0.25%, and I guess soon we'll have data for two other rates. And the pair is still appreciating. Obviously, markets have welcomed the decision to keep the monetary policy unchanged as a great sign for the economic improvement in the Eurozone economy. And the pair has received bullish bias, obviously. So, yes, marginal lending facility remains also unchanged at 0.75%, with no surprise, actually. And on the 4-hour chart, we see that the pair is approaching crucial resistance line at 139.58, and actually it's represented by weekly resistance and daily resistance. Yeah, Dr. Dow, I agree with you that that was widely expected, actually. However, once again, we should focus on the press conference, which is scheduled just 1 hour later, so perhaps we'll see some dovish comments from Mario Draghi, and therefore I still believe that the pair will depreciate in the foreseeable future, keeping in mind that euro-dollar around 140 is a great risk for the struggling Eurozone economy. So, yeah, I guess that will be pretty much from my side. So, yeah, no surprises from the ECB so far. Yeah, and I'm giving the floor back to you, Paulina.
Thank you very much, Alex, for covering on the technical side of the matter. Yeah, ladies and gentlemen, as you can see, not a big surprise from the ECB today, and thank you very much, Doug Dow, for participating in the discussion in the chat section. As always, it's a pleasure for us. And yeah, I guess that's it from our side on the news release, ladies and gentlemen. So feel free to ask your questions in the chat section in case you have any, and stay tuned, because in about 12 minutes even or so, we will have our 12 GMT daily webinar brought to you by our Dukascopy research team. So be sure to stay tuned, because I will host it. It's going to be fun, and Alex will be there as well. Okay, so that's it, guys. Take care, and see you in 10 minutes or so. Bye.